So FOMC meeting just ended. Two key topics to discuss. First, so from our perspective, there's still a clear inclination from Powell to cut rates this year. We think it was pretty clear in his discussion around labor, where he wondered aloud about whether labor is as strong as indicated simply by looking at the recent gain in payrolls. He also flagged that they're closely watching the consumer, where he highlighted the rise we've been flagging in delinquencies. Look, I want to be really clear. None of this is an argument for why things will slow sharply. We don't think that. That's not our base case. We do still expect the expansion will continue through this year. But I think it is an argument to start the process of removing some of the aggressive tightening that the Fed has put in place, where policy is clearly in restrictive territory, which is yet again another thing that Powell flagged. So the second key point is around the Summary of Economic Projections, also known as the SEP. The big question leading into this meeting was how many cuts would they show for the balance of 24, one or two? They shifted to one. Is this a notable difference? I mean, probably not nearly as much as you might think when you also consider they just shoved the second cut most folks thought they would show in 24 into 25. So the latter goes from 75 basis points in cuts to 100 basis points. And in 2026, they ultimately still get to exactly where they were prior, which is to say 3.1%. Look, I am not putting stock in a forecast out into 2026 where the likelihood of it being realized, is small. I'm simply saying that for all of the intense focus on the dots for this year, all in, nothing has changed as it relates to what the Fed thinks is the endpoint. I have no doubt that people will flag that, all of a sudden now there are 4 Fed officials looking for cuts this year versus 2 previous. Is this a hawkish outcome? I mean, no. It's like asking, does it matter that 2 hawks became more hawkish? If that shift means it's worth only a few basis points on a day when CPI came in as a relief, then sure, the hawks can have it that way. But keep in mind, the dispersion of forecast in 24 for Fed officials, 7 Fed officials are looking for 1 cut, and you still have 8 looking for 2 cuts. Finally, and this is one thing we talked about with many of my colleagues here at PGIM, was the prospect for a higher long-run median funds rate in the Summary of Economic Projections, and that did materialize. In fact, I think there's a risk at every meeting over the next several meetings where we get a Summary of Economic Projections that the risk is skewed that this thing will move higher. It's entirely too low.